Good morning, everybody. How's everybody doing today? Good, good, good. Good, good. All right, so we have ourselves a down day today. Whew! You can see SPOOs are off about 15 handles. And the general market across the board is basically down, 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 down. Kind of makes sense. I think they've been waiting for something like this for a while. Productivity stinks. Wages went up. Congress is enabling bad behavior out of some of the other companies. Some of the other states. I don't think anybody likes that. Basically, we were certainly, I think, getting a little frothy up at the top. Wouldn't be shocked if we kind of rolled back down to 1050. But who knows? The Federal Reserve this afternoon, if they announce that they're doing an aggressive buying program. Long term, really bad. Short term, and as we all know, the market thinks extremely short term. I think we get a big bounce out of it. So that's something to keep an eye on. However, generally, every experience I've had with the Federal Reserve has been one of anticlimactic. So, save a surprise rate cut. That's been the only time I've ever seen the Fed actually cause something to happen. So, we had some viewer emails in. And this is from my butterfly presentation I did a few weeks ago. You gave an example showing that an iron butterfly had a better risk-return ratio compared to a normal butterfly. I wanted to know why that is. What is the mathematical... No, what I was saying was not that iron butterflies have a better risk-reward ratio compared to a normal butterfly. What it is I think they're easier to execute. Okay? So the point with an iron butterfly is... like here's an iron butterfly that I have on, okay? We have this one on an option pit. This is one we put on as a group. It's, up $22, okay? Now, here's what I want you to notice. It is the AUG, all the downside is puts, all the upside is calls, all right? And I'm short we're short the 111 puts. What do you notice, if we look at August, about the spread? Well, you won't see it on the 111s. Look at the 107 puts, all right? What do you notice on the difference between the spread between the 107 calls and the 107 puts? The spread's actually tighter on the puts. And so it's actually easier to execute an iron butterfly in a lot of products because out-of-the-money options typically have a tighter spread than in-the-money options, all right? Now, here's the second question. Regarding the probability of success, stock between break-evens and butterfly, what is, when I'm looking at that break-even, all right, that they show here, when we're looking at this percent, okay, is that a Monte Carlo simulation? How do they determine that? It's actually based on volatility, the implied volatility options, and what the standard deviations of that options are, and basically based on the implied volatility. So it's not a Monte Carlo at all. It's basically what it is, the volatility saying the normal curve is, and that's it. So it's not a simulation or anything forward-looking. It's basically just based on implied volatility. You watch. If I raise volatility, this number changes. If I lower volatility, this number gets wider. So it's completely based on the implied volatility of the underlying. All right. Now, I was looking at yesterday I pulled up CEO Charlie Echo Oscar, and we were noticing that this was a really decent looking spread, and it was. Now it's tightened up a little bit because I think that we were relatively certain after looking that there is going to be an earnings announcement coming up at the end of the month if there isn't one already. Okay? So that's something I want you guys to keep on. And I looked through all of the news stories. This is an important lesson. I looked through all the news stories and I couldn't find anything on, looking at all the websites. I couldn't find anything on, what CEO might have going. So then what I ended up doing was I went to Investor Relations and I spent a few minutes going to press releases, and there was ones that just said like announcements. Here we go. And then they gave the day of the board meeting on this one, and the board meeting was going to be is on the Thursday the 19th of August, which is still in the August expiration, which makes me think if they're going to certify earnings, that there's the earnings coming out this month, and that's why that vol was there. So it only took an extra 3 minutes, but I was able to figure out exactly what was happening. All right? So traders, it's really important to spend the time to do that. Now, let's quickly look at volatility. All right? We're down 14 points. The VXX is up 3/4 of a point. That's probably a much better estimate of what volatility is doing today than the 1.85, because the VXX is less sensitive to changes in volatility. Looking at the curve, if we pull up September options in SPX, we can look at SPY. What is the implied volatility of kind of our 11 delta? It's 30.31, let's say 30 3/4, and the 111s are 22. So 30.75 divided by 22. That's a relatively steeper skew, but not ridiculous. So, traders that are maybe looking at iron condors, maybe you should start sniffing around, especially if we drop any more. I think that there may be a real opportunity to hop in. So on that note, unless we've got any questions, I will let you guys run. Do we have any questions? All right, guys, on that note, when is the Fed announcement? It's, I believe it's today, isn't it? Typically happens at 1, yeah, it's at 2:15. Thank you. 1:15 Central, 2:15 Eastern. Any other questions? Nope. All right, guys. Have a great